and above 3,200,000. So what we are going to do is just to take the amount 279,800 minus 3,500,000, and we multiply by 24%. So let's get the answer. The answers: 300,000 multiplied by 7% is equal to 21,000. 11% multiplied by 300,000 is 33,000 naira. 500,000 multiplied by 15% is 75,000 naira. 500,000 multiplied by 19% is equal to 95,000 naira. And 1,600,000 multiplied by 21% is 336,000. This 1,600,000 multiplied by 21%. Yes, 336,000. Then finally, the last one, 279,800,000 minus 3,200,000. 3,200,000. Then multiply by 24% is 66,384,000. So total will be 66,384,000 plus 336,000 plus 95,000 plus 75,000 plus 33,000 plus 21,000. We give 66,944,000. So we can now compute the Nigerian rate. We compute the Nigerian rate. It will be 66,944,000 all over the global income, which is 350 million. 350 million times 100 over 1. Is equal to 19.13%, approximate to 19%. Then the Commonwealth rate will be 5 million over 100 million times 100 over 1, which is the same thing as 5%. Now half Nigerian rate will be 19% divided by 2, which is 8 5%. Now, computation of a relief. Computation of a net tax payable. We have the Nigerian tax payable as computed here. It is a 66,944,000. 66,944. Double taxation relief will be 100 million multiplied by 5%, which is a 5 million. So we have 61,944. And a tax already paid is a 25 million. We have 944 6 2. That is a tax due to be paid. Illustration number 2. Mr. Samuel, a non-resident of Nigeria, has a Nigerian income of 2,500,000 naira in 2012, from which 225,000 naira had been deducted at source. He also earned 1 million naira from Gambia, from which 50,000 naira had been deducted as tax by the Gambian authority. Require compute Mr. Samuel's total Nigerian tax. 2. Or B. Compute the double taxation relief. Then 3. Compute the net tax payable. Solution. Mr. Samuel. Computation of total Nigerian tax for 2012 tax year. Mr. Samuel is a non-resident of Nigeria. A non-resident will only be taxed on the income derived from Nigeria. So, income derived from Nigeria. Income from Nigeria is a 2,500,000, and that is the gross income. Then consolidated relief allowance will be 200,000 plus 20% multiplied by 2,500,000. 700,000 naira. We deduct 700,000 naira from here, and we'll have a balance of 1,800,000 as the chargeable income. So the computation of tax payable will be first 300,000 at 7%, which is 21,000. Next, 300,000 at 11%, which is 33,000. Next, 500,000 at 15%, which is 75,000. Next, 500,000 at 19%, which is a 336,000. According to how we compute it here, 336,000. No, 95,000. Then next is 336,000. That is next 1,600,000. Now we have to be very careful. The total from here to this place is already 1,600,000, and we are to tax 1,800,000. So what we are going to do is just take the 1,800,000 and minus 1,600,000 from it and multiply by the next one, which is 21%. So 1,800,000 minus 1,600,000 minus 1,600,000 is equals to 200,000. Then multiply by 21% is 42,000. So the total tax is 42,000 plus 95,000 plus 75,000 plus 33,000 plus 21,000, which is 266,000. 266,000. No, we can't close it because we have a tax that has already been paid, and tax already paid is 225,000. Tax already paid 225,000. So balance due to be paid is 41,000. Tax due. We cannot tax income from Gambia because it is not an income derived from Nigeria.